Good morning. It's the Wall Street Weekly Wrap Up for Saturday, March 15th, 2025. And I'm your host, John Newquist. Not a lot of stuff on our stocks, but a lot of stuff that affected our stocks. And we'll get into it. A surprising week, actually. If we look at the portfolio, it's up, was up 2.8% yesterday, minus the return of 10.9. We were at minus 7, which is good. Panic Monday is still there. It seems like every Monday we always seem to be down, and that's been the trend. And it's not going to get better. I don't think it's going to get better for a few more months. We take a look at the averages. It's been tough. It's been tough. The S&P, formally entered correction, and it was a 10% drop. So everybody's got their correction, and a lot of people bought yesterday figuring that it's at the bottom. And I says, well, I'm just telling people, ease in slowly until June, because I think it's going to be choppy. April 2nd is the tariff day, of where tariffs are going to be reciprocal across the rest of the country. I mean, we're already having problems with Canada, Mexico, China, and all these other tariffs, and now we're going to do it the rest of the world. You can imagine the reaction is going to be pretty negative and stuff. So, but we're ahead of the NASDAQ right now. Again, our goal is to beat the S&P 500, so we have to wait. And one of the things everybody's looking at is, what are we seeing for the shutdown? Well, the government shutdown's got avoided, thankfully, for now. And then, is Canada trade tensions going down? No, I'm thinking it's getting worse. I mean, there's a lot of anti-U.S., boycott U.S. Hashtags I'm starting to see across Europe, Canada, and other countries. So, issue. And China's doing a stimulus, which I think, if we lose business, who's going to take it? China. China's going to come right over there and grab all our business, because they're not going to do this. So, this is why I'm not. The big R word, recession, could happen. But we'll look at it. Here it is, the chart of the week. Gold, $3,000. Settled at $3,001. We were out here buying it at $1,500, $1,600, $1,700, $1,800. Would you buy? No. I would say it's. I would ease into it. I wouldn't be buying gold like 2%. Gold's and silver are 5% of our portfolio. I wouldn't be buying 5% of it now. I would ease in over a period of maybe a few years and see what goes. You'll be in it. You can go out buy 1% of it and then see what you're doing. 50-50 gold and silver. Silver's at $34. It's nowhere near the high. I mean, Bunker Hunt, when he was trying to corner the silver market in 1980, got it up to $50. $50. It was like $200 silver. So we're nowhere. And silver, a little bit more use than gold. Gold's jewelry and some plating for electronics and stuff like that. Copper, this is stunning. That means everybody's thinking the economy's going to go. Copper's going to be expensive. That's high. Remember, 450 is the number I always use. Economic worldwide, it's good when it's over 450. So, oil, everybody's looking at it. It's in the 60s, which is good. A lot of people think it's going to go lower. Depends if the Saudis keep up their word and pump more gas, lower the prices, which could pressure Russia to settle. I don't know. We'll see. Natural gas, I think now that we're done with the brutal February, which heating bill was over $200 for me, which is low. I've been at $400 heating one, so I tell people, get the 80%, 95% efficient furnace to save money. One of the companies I look at, you look at this chart for, almost all the farmers are like this. Like, look at that downtrend. It's ugly. Do you want to buy it when it's in a downtrend? Not really. You want to try to get it sideways. So when it breaks out like it did, you can see the breakout over here. That's when you'd want to start easing into it, because now we broke the negative trend. And that's an ugly trend since August. Here you are, all-time highs, all-time lows, 52-week lows. So that's how brutal this market is. It's going through these cycles instead of like every 3 years, every 6 months. So they're going to open up a facility, $1 billion facility. That's a lot of money. And it tells me that Merck thinks they're going to definitely expand, and they're going to make more chemicals. I mean, not more chemicals, more pharmaceuticals here. A lot of jobs, a lot of positive things. So I want to be in a company that's investing in the future, not trying to save capital. NVIDIA, the big conference, the GTC. Join us and learn how AI's accelerating computing will help humanity solve our most complex challenges. So NVIDIA has been in another one. As people said, look at it, it's been kind of ugly since June. You're right. That's the nature of this company. Flat, 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 boom. Flat, 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 boom. That's it. And people, if you're a momentum trader, this is what you hate. You don't want something that just doesn't do much. Now, if you're trying to get between 140 and 110 and try to make scalps, as I call them, you can do it. But, we're in long-term NVIDIA. We've been in over a dozen years. I mean, you got to go back, 15 years we've been in NVIDIA when it was like $4, $3. I don't know with all the splits, what it is. But it's in a negative channel, so I always tell people, we have a lot of people who use Robinhood in my talkers, as I call them, my people I work with, and even in our group of 6, 3 of them are Robinhooders, and they've never been through a big correction, and so this is kind of like, just stay through it. I mean, like I said last week, I showed you all the one-day corrections where we had 10% in a day, so you gotta, just kind of like go on and just say we got a good stock. All the chips for the Blackwell are sold for this year. They're all gone. They're all capacity spoken for. So they might talk about the Rubin, which is after the Blackwell, but this is where I would say if I was NVIDIA, let the Blackwell get out there and show results. Don't be putting the Rubin out right away. I know you can do it, but let people like the Grace Hopper. It's 3 years of using the Grace Hopper. Now we're seeing a lot of stuff with AI. The next generation, it's going to be acting and reacting to you, doing analysis, inferences analysis. They can do that already. That's already in the Grace Hopper chip. What it'll do is it'll start anticipating what you want to do, doing creative things. The art side, you can do the graphics on AI, and I have to give Microsoft Copilot the best of the graphics right now, but it can be better, and it will be better. And speech to text is out there right now with the Grace Hopper. Could you imagine? You can start making a whole video by just talking to the Blackwell chips, and it'll put the video together, and you can say, no, I want this person with black hair and 4 legs and things like that, and it'll make it. And once you get it, you can make your whole story, and it's going to revolutionize a lot of different things. A lot of power to do this. So I think we're not seeing the jump yet, but once you start to see the results, then you're going to really have a big result in there. China again, do stimulus. I mean, look at this. This is the trouble with China. Look at this. It's flat, flat, flat. Boom, comes right back down, crashes, comes back down over here, and now we're up again. I mean, think about it. We've been in this. I call it FLCH, but it's Franklin Templeton's China Fund. I like it because it's got the best stocks in China in the fund. Baidu and Beyond Your Wildest Dreams are the 2 best China stocks, both leaders in their sector. And I want it. And, it's a lot easier to buy the fund and get the basket of them and go with it that way. Low fees. So it's you think about 16 goes up to 23. That's, almost 50% jump and stuff. But I think, like I said, I would not be surprised to see this in the 30s a year or 2 from now, which would say, okay, you're going to go up, probably almost 40% in 2 years. That's a pretty good gain. 20% a year is a good gain. So I'm in it. I think China's going to do well as U.S. I don't want to say kind of fumbles a little bit on the trade aspect and starts making a lot of people not like U.S. products. They're going to go in there. It's like, I always tell people, you don't have to drink U.S. whiskey. There's plenty of Scottish, Irish, Japanese whiskeys that are outstanding. So when you can switch in there, you don't have that need. So Tesla, leadership by example. I always watched Elon because Elon was working like 80 hours a week running, SpaceX and Tesla. Then he picked up Twitter, and he's up to 120. I mean, I actually remember him saying 120 hours a week I'm working. I'm sleeping at the place. And now he's on Doge. And, you make mistakes when you're tired. You say things that you don't mean when you're tired. Add all these other issues. The reaction to Elon worldwide has been negative. And, I don't want to say you get kind of negative on a stock because of the owner, but this is what we're starting to have it. And Wells Fargo's, like I said, weak core fundamentals, and we'll talk about Beyond Your Wildest Dreams versus Tesla. Well, it's because it's a big deal. Shocking year-to-date use. They're dropping 60, 70% in some countries. So this is out there. I saw the president with Elon, and he's bought an S3. He can't drive it because the Secret Service says you can't drive it. But if Elon was smart, he'd make a golf cart, because then the president would drive it. He'd drive the Elon golf cart. But why? Why not? You make electrical vehicles. Why not make the best golf cart out there, right? Optimus not ready to go yet. I've been watching Amazon play with their robots. They're ahead of the game for using robotic at work and autonomous drivers. They're going to apply for a permit in LA. Well, they're 2 years behind Waymo, which is Google, and 3 years behind Baidu, which is so they're not leading anymore. There was a time when Tesla was leading, and it isn't now. Where would I buy it? I think below 100. I bought it below 100, sold it at 200. He's not stupid. It's just that right now I think too many fires, and he's not sleeping, and he's making mistakes right and left, and not good. Consumer sentiment, this is it. Inflation's here, policy uncertainty. Tariffs on, tariffs off, that's policy uncertainty. Weaker economic looks. Everybody's reducing their earnings. Everybody's starting to say GDP is going to go down, and the consumer's seeing it. Inflation, fears, things, eggs have gone down, gas has gone down, but a lot of stuff hasn't gone down. And all of a sudden, people are starting to think, I'm cutting back. And this is Walmart, this is Dollar General, this is Delta Airlines warning that people are cutting back on travel, which was unbelievable. Never solid bookings even through the last 4 years, and now they're seeing this weakness. Then you add the fact that people aren't going to travel here. That's going to be a percentage of people not going to Disneyland and all these other things. So, we're trying to base the portfolio for less dependency on foreign revenues and more stuff that's going to happen in here, because it's a subtle change, but it's an important one, because if we start seeing, all of a sudden you can't sell stuff across the seas without paying huge tariffs, and we're seeing the jobs drop, and not going to be good. Not going to be good. Klarna, I played with all the buy one, get one, or buy now, get pay later things, and I thought Klarna was the best. No excessive fees, no high interest rates and things like that. 24% surge in revenue. At one time somebody valued it at 46. When it was hot, but then the COVID hit and people don't have money to do any of that. So I think it's going to be a interesting company, because it's profitable now. It's going to come out, and if you want to get an extra financial, Blackstone's down 20%. I'm thinking, wow, how much does Blackstone have to drop before I buy it? That's top 3 company. I might just go with Morgan and J.P. Morgan and Morgan Stanley to go with Blackstone, but this would be our 4th one if we added it. It's going to come out, and public listing, I think it'll get crazy right off the bat. It'll settle down to probably 15 billion, and I wouldn't be surprised 2 weeks out of the gate it's at 30 billion on the valuation, but 15 billion is fair, and we might buy it at that if it gets there. General Electric, GE Aerospace, remember they spun off all the other GEs, and again, a lot of contracts. What I'm watching is like the F1, F-35 is getting, people are talking about maybe not ordering so much. That's going to kill Lockheed, which we're out of. But you got to maintain military aircrafts. You got to have engines, and they do a lot. And it's one of the rare companies where you bought it. It's kind of up from January levels. So not a bad manufacturer. Pays a dividend, and good. If you want to say who's the best in the world at electronic vehicles, I'm going to pick Beyond Your Wildest Dreams, BYD, in China. And just to give you a feel how good this company is, 318 sold in a month last month. Tesla, 30,000. They're doing 10 times more car sales. That's incredible. Why? Because they're cheaper than Tesla by a lot. A lot. And then, of course, Elon's trying to talk to China, not please don't give us a tariff, because we can't sell the cars already, and I don't think China cares anymore. There's going to be a limit where they're just going to say, well, Elon, you got tariffs on us and you got to pay for it. So this is, you think about it, you bought a stock at 200 and it's almost doubled in a year. Almost doubled on an auto company. That's why I said, that's why the FLCH has got the, Franklin Templeton China Fund has this in the portfolio. It's something I like. You can't buy it in the U.S. market for now. Intel, new CEO. A lot of people liked it. So it popped. Whole thing is, we watch these new CEOs, Chipotle, Starbucks, they always get a pop because everybody gets positive about it. But I just say, I want to see the numbers improve, earnings-wise. Don't talk about we got a new team. That's just hope. I hope they'll do better. So, like I said, this is a big drop. Intel forever. I mean, in the 30s, for 30 to 60 for last 35 years was normal for Intel, and just dropped the ball to NVIDIA and AMD. So I just don't see it. I think they've got a lot of problems, and I think Intel might want to split off some things they can sell, but we'll see. ULTA, big brooded product. Here's the big deal. Revenues fell. ELF revenues up. We'll see the ELF revenues up there. But this is important because this is the big player. It takes everybody down with it when it does bad. It kind of popped a little bit on earnings, and I thought these were bad. Going to guide. Everybody's guiding below consensus. That's what you're seeing. Nobody's going to be out there foolish enough to say we're going to make and beat estimates, because the consumer dropping is a big deal for anybody in retail or other things. So it's a tough area, and this is a stock. You can look at the 200 moving day average, $460, and we're at $100 less. I mean, could it get worse? Yeah, I said it could be 250. It could be 250. So it's don't underestimate this area to mess up. Again, why ELF? Well, because it's cheaper by half on a lot of ULTA product, and it's just as good. I watch Dollar General because, when you sit there and you look at the bad years, like 2001, 2003, 2007, 8, 9, Dollar General did good during those times. It's what I call a very good recession stock, and that's where people are looking at it. And this is doing what I like to see in a stock that's had problems over years. Walmart's been killing it right now. Walmart's been in the sweet spot, just as competitive as Dollar General. It used to be Dollar General was always cheaper than Walmart, but not anymore. And when you go in there and check, you're paying for $1 for this can of something, and it's 87 cents in Walmart. So you're not getting the deal you think you are. I went to one of the dollar stores, and I bought a bunch of seeds for $1.25. Now, if you know anything about seeds, they got them for $5 a pack. Same seed, same company packaging them together, just put a different label on it. They grow. I mean, I plant all this stuff, so you can get stuff that's super cheap when they want to discount it. Were they last year's seeds? Maybe, but they'll grow. It's not, bad, but you want it to base like this. So if you want to, it's a little bit above this trend line, this right here, -1. If you want to get in Dollar General, this is the time to get into it. And again, do I want another retailer? No, I got 3 right now. I'm not interested in a 4th, but this is a company that it's not bad. If you were going to pick on one, maybe nibble into this too. Adobe, it's one of these. Remember, our kings are going to be NVIDIA, Taiwan Semiconductor, and ARM. Those are the principles of the Blackwell chip. And then we got the hyperscalers who are going to use those chips to make things and do analysis. And then there's users like Adobe who use AI to make their products better. The revenues, it's 10%. It's okay. It's okay for tech. We want double digits. It just meets the threshold. They didn't like it. They tanked it down even further. I mean, $600 stock almost down to $394. Man, that's not good. Not good at all. And you just got to start worrying about something like that. Adobe is very complex. It's got all these products like Photoshop and documents and everything else, and I use the PDFs all the time, but they're add-on fees upon add-on fees, and holy smokes, that's why, you get a product, next thing you know, you're $160 for products every year, or 300, and you just say, I don't need it. I don't need it at all. Coals we used to have. We've made money on Coals, buy it at 12, sell it at 20, and things like that, and it's at 8. And people say, why aren't you buying it? Well, revenues are falling. Again, retail, this is an issue. And the question becomes, how low do we buy it? I says, no, it's not how low. Is can it base for 3 or 4 months? Can it go sideways? I mean, this has been a negative channel for almost 6-7 months, and it's been a tough negative channel. Then it breaks down further. We got this big spike, this little red spike, huge volume spike. That's capitulation, but it still went down. So, you know, Kohl's is a good potential retail, bounce back play. But the sales are down compared to retail. You got to have something positive. Otherwise, it's kind of spiraling down to bankruptcy, which I don't think it will. But this is, you don't buy a stock that has no positives. Got to have some positives. Can't say it's just cheap. That's not a positive. That means it's on sale. I mean, I watched all these stocks go bankrupt. Kmart, Sears, everything was super cheap, but there was never a positive. So don't touch those kind of stocks. You'll save your money, and we always want to make sure. I like the industry leaders because that's always does the best. Oracle, we got that 500 billion Starlink project, Stargate project, whatever you want to call that thing. And Oracle's going to be involved in it. 6.4. I mean, CEO talks good, Ellison talks good, but you know what? This is a tech company. It should be doing better. And something's, missing. I mean, I don't know what it is. And I, like I said, Google and Microsoft and Amazon and all our other ones in tech are all double digits. So, they're doing a lot of things that are good, but it's, bad. Short story, if we go back in the Wayback Machine 27 years ago or so, I had Oracle at $8. I wrote it to $78 and I got out of it. I mean, that's how it goes, and sometimes in the stock market. And of course, I think Oracle split 1 or 2 times since then. But I mean, this is it. If everything's positive, just ride the wave until it goes in there. Crypto, this is kind of like the crypto. One thing I like about just graphing it, you see all these different crypto charts, but essentially, November it was flat, and then all of a sudden peaked up in December and shot up in January. That's almost all these charts. And then since January, it's been sideways or it's been down like this. So XRP, a lot of hope on the funds the government was going to buy these. Not now. Maybe, but not now. They got 1,000 fires going. And I hate to say, and this is not the priority. But they got a head of person, and I just hope they let the ETFs go, and ETFs will help to pick all these cryptos. Remember, there's thousands, 10,000s, 25,000 cryptos, and which one will survive and which one will be used. It's worldwide. Because I can imagine the day I show my crypto card and it takes it out of my wallet and pays for the bill, no fees. It could happen, But everybody wants that. I make the card. I got to have some money to run the card, right? I mean, the takeover of MasterCard and Visa is coming. They're hitting people with a lot of fees on the small retailers. This is where crypto can come in. You just got to make it work. Someone's got to make it work. I mean, God, it's not that hard, rocket science. Be able to, even if you just had a company as an XRP holding company, we got it. You buy the product with XRP instead of real dollars, and we'll transfer it, I don't know. It could happen. The XRT, not the radio station in Chicago, but the retail ETF, this is everywhere. Good. Everything's popping real good right here. Boy, we're doing record highs, 52-week highs, and 3 months later, boom, 52-week lows. That's what I said. The cycle is not 3 years. Now it's 3 months, for some of these things. And you got to ignore that because they're churning. The computer trading is crazy, So we have our 3 retailers. Amazon, 10% revenue increase. Walmart's are, one of our largest retailers with the box stores, so 4.1. Remember, we're not looking like 10% for tech. We're looking for better than the average of the GDP. If the GDP is going to be at 2.6, 1.6, they're doing better. Costco, another good company. They're also down. It's like, oh my God, you got all these sales, and You know, you could buy them. Home Depot's doing well because they figure house prices are expensive. You're going to fix your house, and you're going to go to Home Depot to get your products to fix your house. Low, on the other hand, not so good. So here you are, two people in the same sector, one night and day difference on earnings and stuff. Target, not even close to catching up to Walmart. Kroger, a big grocery store, not competing well against Walmart. McDonald's, number one fast food retailer, kind of flat. Starbucks, number one coffee, kind of flat. Then you look at our dine-ins, Eat and Brinker, doing well. Chipotle doing well for now. Remember, these groups could be just like the airlines, and 3 months from now, they're going to get flat growth. So remember, we're not going to go to Chipotle and spend $20 for lunch. Most people won't, because it's going to be eaten out of the pocketbook. Elf is the best in the sector, I think, for company. And again, we went over the ULTA number. Remember, ULTA's not good. Elf is the best. So we're picking it. We're going to take the hit with Elf. It was 36% last month, but remember, they can rotate away from China. Remember, April 2nd could be tough on Elf if they start hitting all these other places like Thailand and India and everything else with reciprocal tariffs. We'll see. Lululemon's coming back, which is interesting. And then the Etsy and eBay kind of flat. So the retail space, I watch because this is America, pattern of spending. And if they're all hot, then we're doing real well. But we got some areas that are pretty weak. Amazon, there's no dividend yet, but look at this. This is where people, okay, it's at the 200-day moving average. Not a bad deal. It's gone down to $40. Look at Amazon. Nice sit there going up here. We're not at the 52-week low, so could we get down to 150? Everything's possible. I don't think so. But I would not be surprised with another 10%, and so that would mean this would be down over here somewhere. It could happen. It just, they're looking at the earnings. Again, this uncertainty, trade and inflation and earnings reduction is affecting a lot of people in the stock market. And again, Walmart's pretty good. 52-week high, getting down here. Here we got to go all the way back to November. What's the 52-week low? We got to get down here. This has been like a tech stock, so we got a ways to go. I don't know if Walmart will get down below this. There's a lot of people like it because it's pretty good revenue stream. They're not, they are selling well in recession, so it is kind of a recession stock, and it's kind of high on PE. One of the things I tell people, look at this, PE Amazon 35, PE Walmart same, and I'm almost at the point where I'm going to get the Walmart annual membership because they're starting to add some perks to it too. So besides free shipping, so we'll see. And of course, Elf, that's not a high PE for something growing 31%. But we're, it's based. This is why we're in it, because it's going sideways. Now, could it go lower? Sure. When we have the April 2nd trade thing coming in, we could drop another 10% or more. But you know what? As long as the people are buying the products, we can wait out the cycle nature of buy and sell. And it's tough. you think about it. Oh, I was at 220 and I'm down here. Well, you aren't. You probably sold out like everybody else when it got down some number. Somebody, how much pain could you take? A lot, So, again, I like the company. I think it's going to do well as long as it keeps on keeping up the sales. And TikTok, where they have a lot of influencers, they sell Elf products or promote Elf products, is probably going to go, if they're right, to one of the U.S. companies. There'll be something. It'll be transferred to U.S. The U.S. will own some percentage of it, and the data will stay at Oracle, which should not get to the Chinese. We'll see. All right, the heat map for the week. Well, look at this. One big shiny star, and that's our NVDA. But otherwise, this is a tough week. Walmart, Costco, Amazon, Apple. Everything. Berkshire, he's sitting on $300 billion in cash. He has more cash than the whole England stock market valuation. That's crazy. Lilly, and a little bit on the positive on the oils, despite being down in the 60s. Been a tough market, so we're going to get through it. I really don't see any optimism. I think April 2nd will be the worst, and then there'll be about a 2 months of lag after that, because there'll be ripple effects of, well, we'll take this tariff off and stuff like that. So I don't see until June really some positive areas. And of course, we'll get the NVDA, earnings, and that'll be a big deal in the spring, and we'll see where we're going. Remember, they're not done with the AI data centers that are doing the Blackwell chips, so that's why we're not going to see much until probably 2026. So it could be a kind of an ugly year for tech, but we're going to sit through it because when it goes, it jumps up super fast. All right, with that, I'll see you next week. We got nice weather. Holy smokes, it's in the 60s, and what a great deal for a March day. Take it easy. See you next week.